What's up, everyone? It's Scotty with MoneyVest. So markets here pushing higher a little bit. We've got the NASDAQ jumping just over 13,500, so up over 60 basis points. We've got the S&P 500 up about 0.5%, and the Dow Jones rallying over 130 points as well. So in this video, I wanted to share a very, very important message and really break down one of the lifelong investing lessons that you will certainly thank me later once you start to better understand how this applies in the real world, in the practicality of the markets, because I hate to break it to you, and I will go over examples, going over sort of what I'm talking about here, and I'll also go over an experiment, which if I do in the future, you guys will understand exactly what I'm talking about. So hope you enjoy it, find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. I've kind of switched around my schedule so that I'm up later in the day, so that I'm waiting for the markets to close so I can do these updates before I actually go to bed. So I do end up staying up till 1 and 2 in the morning most nights. So I would really appreciate a drop like on this video, and of course subscribe to the channel if you can. And links to our Discord and Patreon is going to be down below if you're interested in joining and accessing all the buy and sell alerts, options alerts, trade ideas, the members only videos, the trading view charts, individual stock reports. Everything's going to be included. Okay, so one of the lifelong lessons for investing that I want you to understand and always kind of abide by it is investing requires us to deal with one thing. We are constantly dealing with one thing and one thing only, right? And that is the future. Okay, investing is dependent on the future, period. And the bottom line is, I don't know any single person in this world who can predict the future, at least not consistently. And that's the keyword here. Consistency is the keyword, which nobody in the world can do. Okay? Nobody can predict geopolitical events. Nobody can predict different types of crises. Nobody can predict how the markets will react. Nobody can predict where interest rates are going to be. No one can consistently predict the future. And investing is very much dependent on the future. So how do we kind of deal with this environment? How do we deal with investing in general when we know that nobody can predict the future? The answer? Stop trying to predict the future, right? So it is stop trying to forecast and predict the future. And that's exactly sort of a very, very important lesson that's been learned from Howard Marks. And that's exactly what he talks about in his book. And that's also been mentioned in Psychology of Money as well from Morgan Housel, and Laws of Wealth from Daniel Crosby. So there's multiple books that have mentioned this, right? So this sage advice has kind of stood the test of time in understanding that it's pointless. It is literally a waste of time to try to predict what's going to happen, right? So what are we supposed to do? In my opinion, and at least what I've learned over the years, is to simply react, okay? React and focus on the risk and reward. I think that would serve you much better than constantly trying to forecast and predicting what is going to happen. Because what happens is that we spend so much of our time, our energy, and our focus forecasting or trying to visualize or trying to ideate what's going to potentially happen, that we miss out on the opportunities that are in the present, that are in front of us, right? Because we're constantly forecasting the future. And that is, I think, where the risk and reward, the focus towards the present and the risk and reward comes in. And look, I'm not trying to pick on anybody. There was a very interesting comment that I want to go over from our previous video. So 5 days ago, I did a video, a couple videos actually I did, that I'm ready to buy, and the time is now. I specifically did this video 6 days ago on October 4th. Look, I'm ready. The time is now. I even did this video last week where I ended up investing close to $21,000 3 days ago, right? This was a video from last week where I was investing heavily, and I'm still buying right now. And why is that? Because I focus on the risk and reward. I focus on the present, right? The markets in the future, I don't know where they're going to go. Like, I really don't. If anybody tells you on YouTube, if anybody tells you like in person, oh, this is where the markets are going to go, that person is straight up lying either to you or to themselves. It's fact. It's the most honest and most brutal truth, because the most transparent and honest answer is nobody knows, right? All we can do is try to assess where the risk and reward is and whether it makes sense to be buying versus not. That's it, right? We're trying to get the market's temperature. That's what we're trying to understand. right? In the pendulum that market keeps on swinging from overvalue to undervalue to fairly valued, we're trying to gauge and try to understand where exactly are we in the present moment, and does it make sense to deploy cash or not? And last week was one of those 4 serious opportunities that I mentioned before in my previous videos. December 22 was one, October 22 was one, March 23 was another, and October 23, as we have been down over 8 to 10% from our recent highs, has been another serious buying opportunity. Now, again, I mentioned in that video, and there might have been some confusion. David mentioned, how can you say that 20 to 30% doesn't matter in 5 to 10 years? This is boggling to me. You don't just blindly buy at any price because it will eventually go up. If you do the math, 2% year-over-year increase over a lifetime would be life-changing money. There's no rush to buy right now, as the money markets are paying about 5% while you wait, in my opinion. Yes, if stocks reach your valuations with discounts, go ahead and buy, but don't just buy because, did I miss the video where you come up with the S&P 500 valuation of 4,000? So, look, I think we're talking about 2 different things. And David's got a point here, right? You can't just blindly buy. You can't just go out there and start buying blindly, right? Valuations certainly have a key role to play. And valuations are basically telling you where the risk reward is, right? It's the price that determines your future returns, not the other way around, right? It's literally what you pay for the stock, what you pay for the house, what you pay for the car, the price that you pay determines in 5 years or 10 years whether you end up making money or not. But I think we're talking about 2 different things, as I've already mentioned, because what he's talking about is 2% year-over-year increase. Yes, that's a CAGR. That's a compounded annual increase. And if that 2% is over a lifetime, yes, that can equate to life-changing money. But what I was talking about is at some point, you have to understand the risk and reward to a point where is the risk, basically is the opportunity cost worth missing out on the future potential reward, right? So for example, N phase, right? Very simple example I'm going to give you, N phase. If I wait for N phase to drop down to $100 versus me buying at 115, right? So there's that 15% discrepancy there at 115 versus $100. What I was trying to say is that over the long term, 5 years, 10 years out, that 15% doesn't make much difference to me if I believe that N phase over the long term, 5 years, 10 years out, is going to be $300 plus or $250 plus, right? If it's going to more than double from low $100, in the long term, it doesn't really matter whether I buy it at 100 or buy it at 115. Because you see, the problem with this analogy or problem with this sort of mindset is that we tend to get too fixated on our fair values. We tend to start getting very, very fixated with, okay, this is the fair value, this is the intrinsic value, this is exactly where I'm going to buy. See, markets don't work like that. Markets are not, this cynical machine where they're going to be automated by the point and they're going to exactly come down. They are very, very chaotic, right? They're very, very chaotic. They're very messy. They break down, they rally, they trade very much on sentiments. You're almost never going to see the markets trade exactly down to the fair value and then start rallying back higher, because markets are not efficient, right? They're not efficient in that way. So there has to be room for flexibility. There has to be wiggle room, in other words, plus minus certain points where you are willing to compromise on your fair values. Now, not to say that you are okay buying 50%, 80% at a premium, right? Not to those crazy levels. But yes, 5%, 10% plus minus, there is flexibility there. That's why we have the flexibility range in the first place, to better understand, okay, this is the range for the fair value, that if stocks come down to these levels, the risk reward is what starts to become very good. Can the stock price drop even further? Yes, absolutely, right? Nobody knows where the prices are going to go. They can certainly drop even further down, but the analysis is not so much on the price prediction, but it's focused on the risk and reward. So hopefully it's a much better understanding, and I'm able to explain it a little bit better, and where the focus really is. And, when I see sort of like headlines like these, that Tom Lee mentioned, there's a good likelihood that the market bottom is in. Paul Tudor Jones, who I also respect as a trader investor, he says the stock market likely to see a 12% retreat ahead of recession. And he says, I like Bitcoin and like gold right here. These are at the core very much predictions, right? These are at the core predictions, because that's what gets all the clicks. That's what gets all the all the popularity. That's what the media will try to extrapolate out of you. So if you are on these interviews with CNBC or whatnot, they're gonna try to extrapolate, where do you think the markets are going, right? Nobody talks about where the markets are today and what should investors be doing today. Always the questions are, where's the market going, right? Where's the market? Where's the price going? And oftentimes those types of estimates and analysis and forecasts are, most of the times, 90% of the times, they're just incorrect. That's why I don't even try, because I know I'm going to be wrong if I make these predictions. Anyway, so wanted to go over that, a little bit of an educational sort of section to this market update before we even get started here. But yeah, definitely wanted to go over this to kind of help you better understand where to focus on, where to really put your time and energy instead of trying to constantly predict what's going to happen in the market, because that never ends well. Anyway, so going over to the markets here, very, very strong close. We got the NVDA, Amazon, Tesla stock pushing higher, MasterCard, Bank of America, Coca-Cola, Pepsi here. Very, very nice move to the upside. We got all sectors, so all 11 sectors in the S&P 500 are up over the last 1 week. We've got only one sector, so consumer defensives is the only sector that's down, and over the last 1 month we got comm services pushing higher, everything else is down. Palladium here, Nikkei prices, we got DAX, heating oil, orange juice all pushing up, with cotton, lean hogs, wheat prices, oats and volatility selling off. Bitcoin's back under 28,000, Ether also back under 1,600 at the moment. So when it comes to the S&P 500, let's just dive right into the volatility first. So down over 3.5%, so closing in at just over 17. We were trading as high as 21 levels. And, we talked about this, when the VIX gets high, it's time to buy. When the VIX is low, it's time to go. And again, it's just kind of analyzing the present market situation. We got up to that level and the markets were down, quite considerably from their recent highs. And majority of the stocks were trading below their moving averages. Doesn't matter what's going on in the world. It's buying opportunity in my opinion. So we can start to look into deals. Risk and reward ratios are good. And we can start dollar cost averaging into those companies. So volatility here dropping a little bit over 19% from those highs. Still trading a little bit over 17. So we'll continue to monitor where the VIX goes. And next support is going to be down to 12 to 13 levels, with the resistance staying put at roughly around 19 to 20 levels for the VIX. Crude oil prices here, once again, kind of consolidating sideways with everything that's going on, in the Middle East. We did get a little bit of a spike here, 4% yesterday. And right now we're basically just trading sideways at the moment, trading at just over $85 a barrel. Bitcoin here struggling, just back under 27,400, so selling off quite considerably here. Ether also down almost 1%, starting to break down a little bit from this higher low, and right now just consolidating in that range, with 1750 being a resistance, support level staying put at 1530, 1540 levels. Now, going over to the S&P 500 here, by the way, I did pick up in mode yesterday. Very, very nice rally on the day today. It was up over 4.7, actually 4.3% back over $29. I got rid of DFN, had a very nice swing trade on this. Closed at around 1620, I think. I was up actually close to over 6%, close to 7%, I think. And then TQQQ, I definitely did close a little bit earlier last week, up another 1.6%. So this was another swing trade, which was very appealing from a risk reward standpoint. So that's also closed out. And then right now I did actually pick up more TMF on the day today at closer to 440s. So pushing back up to 452. And then we also had a potential trade. I actually shared this in our trade ideas for home builders, XHB, that was up 1.15%, and NAIL, NAIL, which is more like a leverage ETF, which was up almost 4%. At one point, it was up over 7 to 8%. So very, very nice move to the upside. This is also on the watch list, a lot of these ETFs, because they are, representing some good deals and opportunities for a swing trade back higher, given how attractive the risk reward levels are at these levels. So going over to S&P 500 first. So SPX here, still within the context of this downtrend. So we're very much trading inside this lower highs and this lower low. This right here is ideal from a risk reward standpoint. So you can see that we kind of bounce off of that 4,200 level. That's exactly where the 200 simple moving average was for the S&P. And the next resistance is going to obviously be at 4,450 to as much as 4,500, kind of in line with this lower high. So inside this downtrending channel. Now, as soon as we get up to that lower high, that's where all the long positions are going to be off, at least for right now, until after we break above 4,500 and possibly even 4,550. And that's going to break out to new highs and potentially for the S&P to make higher highs and higher lows and kind of shift the overall trend from a downtrend to an uptrend for the S&P. So that's exactly what we're going to be watching. NASDAQ here, on the other hand, same exact pattern. So lower highs and lower lows. Very, very nice move to the upside from 13,150. And the next resistance, as I've already pointed out in my previous videos, is going to be sitting right over there. That's going to be that lower high for the NASDAQ, and roughly a 13,800 to 13,900 as well. For the NASDAQ moving forward. Now going over to Apple stock, and Apple here also pushing higher, but look at where we got rejected, right? You just can't make this stuff up. This right here, the green candle with a very long wick. So basically sellers stepping in at around $179, closer to $180. The high for the day, $179.72. The numbers are right in front of you guys. Like, folks, I can't make this stuff up. We literally got rejected almost at that resistance, and sellers stepped in. So we're still very much in the context of this downtrend. So lower highs and lower lows, and support level is going to stay up roughly around 171, 172, all the way down to as low as 164. Next one on the list is going to be Amazon, and Amazon here also pushing higher, so up almost 1%. We've got a gap to fill here for Amazon, so that may or may not eventually get filled, but we're still very much in the context of this downtrend of lower highs and lower lows, and that resistance is going to be at $137 per share. Now, one more thing that I want to quickly mention about predictions and making predictions is that the reason why they're so popular, as I mentioned earlier, is because people want to hear that, right? So if I start, making predictions, on a regular basis, let's say, for example, starting tomorrow, I put my titles like market predictions, or, I start actually making predictions. And the interesting thing is that it doesn't really matter how many times I actually end up making the wrong call, because people are so interested in knowing predictions in general. It's still going to matter. You know what I mean? Like, it's still going to hold its value over people's interest, so to speak, right? And it's kind of case in point. And again, this is not me picking on anybody, but why do people tune in to watch Jim Cramer, right? Why is it so that people are so excited or interested, right? Even though there might be his calls are, inaccurate or incorrect or whatever, but why do people still tune in to listen to him? Because it's interesting, right? Because he's making predictions, and that's interesting to people, even though we know that it may not be accurate, it may not be correct. It's just how human nature works, and that's obviously what's been discussed in the Psychology of Money books, and the most important thing in the Law of Wealth and a lot of these other books, which is quite interesting concept in my opinion. But anyway, coming back to Amazon here, so lower highs and lower lows, and right now we're in this downtrend, and next resistance is going to be all the way up to 137, closer to $130 per share. Now going over to Tesla, and Tesla had a pretty decent move to the upside, but look at that. Look at where we got rejected here. Right on the dot, 268.74. So this right here is the lower high for Tesla. And that's exactly where we are, somewhat getting rejected. High for the day was a little bit under 269. And we're still coiling inside this somewhat of a higher low. So it's been drifting above this higher low. And right now we're getting rejected at this lower high. So, Tesla is kind of coiling in to this pattern. And there's a possibility that we do see a very nice move in either direction. Obviously, nobody knows where this is going to break out, whether to the upside or to the downside. Time will tell, but it's certainly gearing up for a pretty significant move. And you know what the interesting thing is? If you take a look at the earnings and where that dotted line ends up, it's literally right inside sort of like that converging line, right? So it's possible that we kind of coil in further and further in between this lower high and this higher low, and then eventually get a huge breakout or a breakdown depending on the volume, depending on the earnings numbers at the end of October, towards October 18th when the earnings are released for Tesla. So that's something to keep in mind. NVDA here, on the other hand, pushing higher, up over 1%, so just under 458, and next resistance and target is going to be all the way up to $480, so that's going to be the level to watch. And of course, support level stays put at $400. The risk reward was somewhat better for NVIDIA at those $400, because obviously it was down over 20% from its all-time highs, almost 18%. But the valuation obviously was still a little bit too expensive for my personal taste, but it has recovered really well, considering that the RSI and the MACD was also very oversold. AMD, on the other hand, did a video on AMD earlier today. Definitely do check out. They are partnering and acquiring Nod.ai, which is going to be a huge acquisition for AMD from an AI perspective. And they're going to start competing with NVIDIA, but that next resistance is going to stay put at $112 per share, with support level staying put at roughly $100, sub $100 per share for AMD as well. Talking a little bit about PayPal, and PayPal here definitely underperforming, down 40 basis points. So not really going anywhere, so continues to kind of converge in this falling wedge pattern. Support level is going to stay put roughly around $56, $57 per share over here for PayPal. And of course, if you do see a nice breakout above this level, 12.8, 13% move to the upside is a possibility. Next resistance and target is going to be at $65 per share. And right now, the risk reward looks actually very, very appealing for PayPal, considering that it's already down so much. And we've got the earnings coming out with the new CEO and the guidelines and the objectives and the mission and the vision. Everything's going to be shared for PayPal moving forward. So I'm super excited for that. Square, on the other hand, a very nice bounce back higher. It was already incredibly oversold. It's been selling off for quite several weeks here. We talked about the RSI, we talked about the MACD, how oversold it really was, and we're now starting to see that really, really nice momentum back up. And next resistance and target is going to be all the way up to $52 per share for this company moving forward. Talking about Meta platforms, and Meta here also continues to push higher, but if you take a look at where we got rejected, 325, not making this stuff up. Again, this is the resistance that we talked about in our previous videos, and high for the day 324.66. So we've got a lot of stocks kind of coming up to their resistances. AMD, for example, 112 is going to be that level to watch, as we discussed earlier. Meta is coming up to that 325 resistance. Tesla is coming up to that $268 to $269 resistance. Not to mention Amazon's got a little bit more ways to go, but Apple here coming up to $179, $180 resistance. Microsoft, on the other hand, also somewhat getting rejected here, I would say. So a little bit of that lower high coming in. So earlier we had it marked down slightly. We can push it up a little bit, and that's that lower high here, still trading within the context of this downtrend. And Google also getting rejected, right? So red candle here, getting rejected at 139, close to $140. High for the day was close to 140. And the risk reward for Google from a technical trading perspective is not that great, because right now we're kind of on the upper limit of that resistance, and Google is actually one of the fewer stocks that's hitting a 52-week high. So it's on the lower spectrum when it comes to the risk-reward trade-off here for Google. And finally, Netflix here selling off quite aggressively once again. So Netflix's analysis is actually over here, which you'll notice has been validating at that support very, very nicely for some time, and right now getting rejected at that 21 EMA once again. And Enphase actually had a pretty strong day, breaking out above that 21 EMA. Very, very strong move to the upside, 5% gain, and that resistance right now is going to stay put at about $128. So this right here is going to be that level to watch, and support level, of course, inside this green rectangle, so roughly at about $108, $110. And finally, we got Shopify also pushing higher, up almost 3%, starting to break out from this resistance, but right now getting a little bit of that resistance at that 21 EMA for Shopify as well. So I hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. A little bit of a longer video, but hopefully it was educational and something that, you know, benefits you over the long term, because, you know, it's a fact. It's a logical fact that predictions and forecast are very, very inconsistent from a perspective of, you know, being accurate. And that's exactly why you'll never have Warren Buffett. You'll never listen to Warren Buffett make predictions, right? He never does. Even if people try to ask him what he thinks about the economy or the interest rates or whatnot, I've never heard him actually make a prediction about where interest rates are going or where markets are going, right? It's for a reason, because it doesn't work. So I hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below if you're interested in joining. Don't forget, I've opened up a couple more spots here for our investor early bird tier. If you want to join, get access to all the reports, members only videos, and engage with our community. We've got a little bit over 1,000 members in our Discord now, just talking about markets pretty much every single day. And as always, happy investing. I'll see you all in the next video.